Everyone wants to know the secret to building wealth that lasts for generations. The truth, there is no secret. Just small, consistent actions repeated until they become life-changing. But that's not sexy enough to sell courses about, so nobody talks about it. We've all been sold a lie. That wealth building means finding the next big thing, the perfect stock, the crypto moon. But here's what history teaches us. Every generation falls for the same trap, just with different packaging. In the 1920s, it was Florida swampland. In the 1990s, dot-com bubbles. Today, it's promises of dropshipping empires and NFT fortunes. The costume changes, but the circus stays the same. So what actually works? Real wealth building is almost embarrassingly simple. Take money you don't need immediately. Buy ownership in businesses that produce real value. Then just sit there and let time do the work. That's it. No complicated strategies, no secret formulas. Just patience and discipline over decades. But here's the problem. Humans are wired for action. Sitting still feels like failure to our brains. So we tinker, we trade, and we optimize ourselves right into poverty. The irony is, the less you do, the richer you become. This is the foundation of true wealth creation. It's not about being clever, it's about being patient. Let's be clear about what passive income actually is. It's the dividend that arrives whether you're awake or asleep. It's the rent payment from a property you bought 30 years ago. It's the royalty that outlives its creator. These income streams share one critical quality. They don't require your daily participation, your emotional energy, or your constant decision-making. Building this requires massive upfront work. First, you have to earn the money. Then, you need the discipline to spend less than you earn. After that, you study businesses until you can separate quality from garbage. And then comes the hardest part, the part that breaks most people, doing absolutely nothing for decades. This is where the psychological battle begins. While your neighbors are day trading meme stocks, you sit still. While your brother-in-law flips houses and brags about it at dinner, you hold the same boring investments. While the financial media screams about the next big opportunity every single week, you do nothing. This psychological challenge is harder than any intellectual challenge in investing. When you finally understand this, everything changes. You realize you're not just buying ticker symbols that bounce around on a screen. You're buying ownership in actual businesses. The price of Coca-Cola stock might swing wildly from day to day, but the business of selling beverages to billions of people just keeps grinding forward regardless. And you know what the greatest destroyer of wealth is? It's not market crashes or bad investments. It's fees. When someone charges you 1% annually to manage your money, they're taking 1% of your entire portfolio every single year. It doesn't matter if the market goes up or down. It doesn't matter if their advice was brilliant or terrible. Over 30 years, that 1% fee can cost you nearly a third of your final wealth. Gone not to market losses, but transferred permanently to someone who, statistically, probably can't even beat a simple index fund. Most active managers underperform the market after you subtract their fees. Most people would be far better off just buying a low-cost index fund for a tiny fraction of that cost and doing literally anything else with their time. Here, an uncomfortable truth. Most people claiming to live on passive income are lying to you, or to themselves, or both. The real estate investor who claims to be earning while sleeping is actually the one answering tenant calls at midnight. The dividend investor who talks about total freedom is checking his portfolio 6 times a day, anxious about every single headline. Real passive income is rare because real psychological passivity is rare. It requires setting up a system and then genuinely leaving it alone for decades. No checking, no adjusting, no optimizing. Most people are psychologically incapable of this level of detachment. And that brings us to the spending problem. Here's what nobody tells you. Achieving financial independence doesn't require an impossibly high income. The reason most people never get there isn't because they don't earn enough. It's because they spend too much relative to what they earn. They earn more, so they spend more. Their lifestyle inflates in perfect lockstep with their income, and they stay on the treadmill forever. If you can live comfortably on $40,000 a year, you only need a portfolio that generates $40,000 to be completely free. But if you need $200,000 to maintain your lifestyle, you need 5 times the assets. Every dollar you do once spend is a worker that can be sent out to earn more for you through investment returns. Every unnecessary purchase is a worker you've just fired before they could even start to compound. Building real wealth is mostly about what you don't do. Don't buy things you don't need. Don't trade when holding is the better option. Don't interrupt compounding with unnecessary activity. Don't chase status symbols that only depreciate in value. Every negative decision is more powerful than a positive one, because avoiding stupidity is easier than achieving brilliance consistently. The wealthiest investors didn't get rich because they're smarter than everyone else. They got rich because they avoided being idiots for longer than most people can stay rational. They didn't buy dot-com stocks at ridiculous valuations. They didn't panic sell during market crashes. They just sat there, decade after decade, letting compound interest do its magic. Here's the simplest test for whether you're building real passive income. Ask yourself honestly, if I did absolutely nothing with my investments for the next 5 years, would I have more money or less money at the end? If the answer is less, you're not building passive income. You have a job disguised as investing that requires your constant attention. If the answer is more, congratulations. You've figured out what most people never learn in their entire lives. But most people's psychology won't allow them to pass this test. They need to feel productive. They need to justify their existence through activity. So, here's the strategy. The simplest passive income strategy that actually works. Spend less than you earn. Invest the difference in quality assets. Then do nothing for as long as humanly possible. Don't trade, don't optimize. Don't get clever. Just sit there and let simple arithmetic compound your discipline into wealth. This won't make you rich next month or next year. But in 30 or 40 years of consistent execution, you'll look back and realize that doing nothing was the most profitable thing you ever did with your money. The wealth you build while you're out living your life will seem almost miraculous. But it's not a miracle. It's just mathematics, left completely undisturbed by human stupidity and impatience. If this sounds boring, if you need more excitement than watching numbers slowly grow over time, then you're not ready for this path. The market rewards patience mechanically, and it punishes activity systematically. Choose wisely. Either way, time will teach the lesson eventually. It's better to learn it early and profit from it for decades than to learn it late and regret the wasted years. That's the truth about building generational wealth. It's simple, it's boring, and it works. Everything else is just a distraction designed to separate you from your money. Thanks for watching.